In this week's episode of the Stockscores Market Minutes, this week's topic, shorting the elevator. What the heck does that mean? I'll explain. After that, I will do my regular weekly market analysis. We will assess whether there may be another wave in the market correction coming next week. I'll do a market scan in search of opportunities and look at the trade of the week on ROKU. All right, so shorting the elevator, what the heck does that mean? Well, there's a saying in the market that it tends to take the stairs up and the elevator down. In other words, upward trends tend to be slow and steady, and downward trends tend to be quite sharp and pronounced. This makes shorting very lucrative when the market is selling off. Now, most of the time, the market is stable and shorting performance can be poor because there's that slow, steady climb higher. However, there are times when it is best to short, and that occurs when the market is moving abnormally down, or to short individual stocks that have been very abnormal and are breaking down. So I don't short most of the time, but when I short, it's quite lucrative, and I just wait for the market to really be abnormal, to really make that sharp move down. And that tends to come after the break of an upward trend that has been quite strong. All right, so let's get into this week's market analysis, starting off with the US markets. And here we have a chart of the S&P 500 on the 30-day, 60-minute time frame. And you can see that this upward trend line is still holding. And this one, which is a little steeper, was actually broken on Friday. And that sort of breaks down through some support. So my sense is we're probably going to pull back a little bit more until we hit support at this upward trend line. And therefore, I don't think it's really a good reason to panic, but some of the headlines are pretty negative because we heard that there's some problems with China-US trade again. So let's take a look at the longer term chart. This is the 3-year weekly chart, and you can see that we've risen up to resistance. I always say when markets rally into resistance, they get stuck at resistance, and we got stuck this week, and we may start to pull back. Now, big picture, we've got a good upward trend line here. I don't see considerable downside from here until that upward trend line holds as an area of support. So I think you can be a little bit cautious because I do think next week we may see a little bit more weakness after some of those negative headlines on China-US trade on Friday. But at the same time, the long-term picture is still pretty good. We have rising bottoms, we have optimism, and until that changes, I'm not going to get too worried about it. Moving along to the Russell 2000, which is the small caps. And I like that money is starting to come back into the small caps because they're more fun to trade. They have the potential to make the bigger percentage moves in a relatively short period of time. They've risen up to resistance and gotten stuck, but they didn't have as much weakness on Friday as the larger cap S&P 500 did. And I do think that there's a rotation underway where some money is going into these smaller cap names. We've seen some strength in the biotech sector, for example, and that bodes well for the trader because that, again, is where the action can really be. On to the Canadian markets, and here you have a chart of the Canadian TSX XIU ETF, and nice upward trend, really outperforming the US markets of late because we are in that good upward trend that's largely driven by some strength in commodities. We've seen strength in gold, we've seen strength in oil a little bit this past week, and that trickles down into some of the banking sectors in Canada. So Canadian market looking pretty strong, and when we look at the longer term weekly chart, we see that unlike the US market, which got stuck under resistance, the Canadian market's been able to break out. So I do like the Canadian market. I think after, good 4 weeks higher that we've had, we're probably due for a pullback, and I wouldn't be surprised if we get a little pullback short term. I would consider that to be a buying opportunity for Canadian stocks. TSX Venture, which of course is those micro-cap names in Canada, still not a great chart. You can see that we're sort of building this little pennant pattern here, but the trend into the pennant is down. We broke that downward trend line there. There's a lot of confusion, not real strong buyer enthusiasm. I think it's got some potential to turn around. We're starting to see some strength. Certainly seasonality-wise, you do tend to see this market do well from sort of October, November until April, May. So we're coming into that stronger season. Let's see if it starts again this year. A little bit of strength on Friday, and perhaps that's encouraging for next week. On to currencies. US dollar, of course, has been the strong currency for some time, and it's still in that nice upward trend. I think it remains a bullish chart. Looking at the Canadian dollar, it is trying to bottom. We've broken that downward trend line. We're working on a rising bottom here. We've had a couple already. And so perhaps we're going to start to move back up towards that and break out through it. It is encouraging, but there's work to be done on the Canadian dollar. It's more a situation where it's stabilized, stopped going down, but it really hasn't started going up yet. On to the interest rate chart. Of course, the TLT is our proxy for US interest rates based on the bond market. If this chart goes up, interest rates are going down. We had a pretty strong sell-off last week, kind of took us back to the upward trend line, and then we bounced off of that upward trend line this week. I think we're going to see the bond market go sideways in a pattern like this, so expect it to sort of hover between 148 and 138 on the ETF, and that means interest rates are going to be stable, very low interest rates, so that's a positive for the consumer, but I don't expect that the bond market's going to rally a lot in the near term. I think it's going to stall here for a little while. On to commodities. Here is the gold chart, and of course gold got a little overextended to the upside. We know that because it ran away from its upward trend line. It has since pulled back to the upward trend line and is now starting to bounce again. Of course, some of those concerns about China-US trade, I think, helping gold go higher on Friday, and I think that continues next week. A little hedge against some weakness in the stock market is to play some of the gold names if they do hold that upward trend line and start to move to new highs again. So I think that we're probably going to see gold move higher next week, and that'll help those mining stocks. On to oil. Of course, we had to start the week that negative news about Saudi Arabia's oil fields getting bombed, or whatever you want to call it, vandalized, and that broke oil through the downward trend line, but they have really failed to hold those gains, and so it's not a strong signal that oil is reversing. I think it's showing a little bit of promise. We had some volume there, but I actually think oil's still not great on the longer term chart. Looking at the fear chart, we have, of course, the VXX is our proxy for fear, and we had a little spike up again on Friday, showing that concern about China-US trade starting to creep back into the market, and that's what motivated the VIX to run higher there when that happened as well. We could see that in the next few days, so perhaps the VXX will be a place to trade on the long side. So my ratings then: neutral long-term on US stocks, bearish short-term. I do see a little bit of a break of an upward trend. I think we could see some lower prices next week. Bullish on both time frames for Canadian stocks, although I do think it's a bit of a chase to go after some of those names right now. They're probably due for a pullback. Gold, neutral long-term and neutral short-term. Oil, neutral long-term and bullish short-term. We've got a little bit of a sign that oil is starting to turn. So stocks have rallied into resistance and stalled. We talk about this all the time. When a market rallies into resistance, it usually gets stuck at resistance. With some trade concerns rising again, we may see further weakness next week, and that pushes money back into gold as that safety trade. Oil did try to break the downward trend, but it kind of failed, so it's having some trouble doing that, and fear is rising. All right, let's do a Stockscores Market Scan next. We're going to jump over to the Stockscores website, and this week I'm going to run the abnormal breaks scan for the US, but where I would normally look at these on a daily interval, I'm actually going to look at the 3-year weekly interval because I like to see that big picture chart pattern. And so as I'm going through these, I'm looking for breaks from predictive patterns. And when I see one, I will blow the chart up and describe what I see. So the first one that I like is ADMS right here. And we'll get our line drawing tool out and do a little bit of drawing on there. So you can see the downward trend line was broken. We have since built a rising bottom, and now we are breaking from that rising bottom on the weekly. Now I'd like to take a look at the shorter term time frame as well, so I can click on that and make it smaller again. Click on the 6-month link, and now I can see how that daily chart looks. And here I can see that volume has been increasing this week, so it's getting some accumulation of the stock, and we're breaking out of this sideways range. So I like this. I would give this a 7 out of 10. Moving along to the rest of the stocks that were found in the market scan. And there we go, keep on moving. Quick question. Actually, we'll look at Finisar first before I ask this question. So here we've got a build of a rising bottom. We're not quite through resistance, so it shows a little bit of promise. You can see some volume coming in on Friday, or last week really. So I think it has some promise. It didn't quite break out, but I think this is a stock to watch. I'd give it a 6 right now, but if it can start to move up through 25, then it bumps up to a 7 in my book. So the question I have is this thing that I'm doing right now where I do market scans and assess the charts. Is that something that people would subscribe to? If I did this every day and went through the market scans on Stockscores and picked out the names that I like, analyzed the charts in a 4 or 5 minute video each day, is that something that you find interesting? Leave your comments in the comments below, and I look forward to reading those. Or put a thumbs up if you like the idea. If you like that idea, put a thumbs up on the video, and then I'll know that that's something that's of interest. So here we have ESNT, and what I like here is this long-term resistance has been broken. We have fairly low volatility. This is sort of a cup and handle pattern. It's kind of a funny shaped cup, but you get the idea. But what's important is that we're getting that breakout through resistance at $50. Volume increased that last week. Now let's take a look at the daily chart. So I'll just click on 6 month here, blow this up, and there you can see the breakout right there. Came on Friday, really nice strong volume, optimism into the breakout, little cup and handle pattern. I give this a 7 out of 10. I think that's probably about it. We'll just go through the rest. I went through these just before I started recording the video, and I think that was it. So let's jump back into our presentation and look at the day trade of the week. Again, this is educational purposes. Obviously, you can't day trade with hindsight, but I want to always show an example of the kinds of stocks that I like to day trade. This is ROKU. Been a real strong stock the last few months, but the last few days it's been pretty weak. And on Friday, it broke down at the open and gave a bearish action candle. We usually talk about bullish action candles, but in this case, it's a gray dot. That's my Stockscores indicators for TradeStation at work there. Gave a bearish indication that the stock was likely to go lower. In this case, it required a position of 40 shares for $100 of risk. That's about $5,000 in capital, but of course you can leverage that 3 to 1, meaning that it required $1,660 of capital to do the trade. The stock ended the day at a 7RR, 7RR meaning reward for risk. So for every $100 risk, you made $700 on this trade. That was a 42% return on a 1-day hold. All right, well, that has been the Stockscores Market Minutes for September 23rd, 2019. Again, if you like the idea of having a daily video where I comment on charts, that sort of thing, it would be a subscription product, something that you could purchase. Leave a thumbs up on there, leave a comment in the comment section. I look forward to reading those. Have a great week in the market and trade well.